to the poll report. It's 9 o'clock on May 3rd. May the 3rd be with you. Oh, wait, that's tomorrow. Just kidding. So we got a pretty exciting day today. A lot of stuff in the green. I just posted this in Discord. Is risk on today from what I can see. Futures are up, crypto's up, all the major indexes in the U.S. up pre-market. Apple had the big earnings yesterday after market and announced a huge cash buyback. U.S. non-farm this morning, jobs were missed, average earnings missed, unemployment ticked higher at 3.9%. What does that all mean? Let's make some sense of things in the charts. Here's non-farm payroll forecasted 238, came in 175, revision up from 303 to 315. Average earnings 0.3 expected, came in 0.2. Rate 3.8 to 3.9. I do know that if we get to 4.2, this is another. So a lot of people are leaning on the recession indicator of a 3-month yield and 10-year yield, or the 2-year and the 10-year inverted yield curve. Another one that's also been undefeated has been for signs of recession having a 1% increase over a 12-month rolling period in unemployment, and I'm pretty sure that puts us 4.2%. If we hit 4.2, that would be the increase. So if I go into some more points here, we roll back to April of 2022. We were as low. Let's see here. I'm looking for the lowest that we've seen. 3.5, 3.4. Okay. Yep. So 3.4 is the lowest that I'm seeing here. And if we go 3.4 to 4.4, that would be that 1% increase. And that 3.4 would have been May of 2023. Interesting. I don't think that, May 2024's print is going to be 4.4, but just something to keep an eye on for unemployment as we move forward. But anyway, you hear some crazy snoozing in the background. It's this guy. But that's U.S. numbers this morning. Like I posted in Discord, it's risk on for what I can see. Everything is up. Dow futures up 500 points. And Apple's planned payout. Yep. So here is the crypto market. Bitcoin's back up towards 61,000. Ethereum up for the week. Everything looking pretty positive. Here's the futures market taking a big rip so far. This is going to create some pretty wide gaps in the market, so I'm curious if it gaps stretches or gaps falls or fades. Gaps goes nowhere. We really didn't have a lot of real movement during the week outside of the FOMC. It was 2 to 3 p.m. up, or it was really more like 2 to 3 p.m. up, 3 to 4 p.m. down. Finished pretty flat on the day. Yesterday the market just kind of drifted higher. But Apple's buyback, I mean, again, the company's $2.65 trillion, largest in the world market cap wise for the S&P 500. And it was enough to get the market excited to at least push aggressively today. So futures market is on the rise. Here's what we're seeing for the indexes. 426.90 was the close. We're pre-market at 433. If we zoom in, let me get a edgeful report here. If we go by SPY, by gap fills, we're going to go by size. Let's go to the SPY first. So the SPY from 505 to 510.88, that is a $5.85 gap. So a 585 gap divided by a 505.03 starting point. That's a 1.1% gap, which means we're here. So this is pretty wild and crazy. Let's go for the last 5 years. Anytime that we had, so 1% to 1.5% gap up, okay? 81% of the time that gap is not filled, which means we're likely going to stay green on the day. Doesn't mean that we can't gap up and attempt to fill it. It just means that we're likely not coming all the way back down to fill that gap. So one thing to consider for today, it might be tough to actually buy into this at opening bell. If we open up at 511, that's going to put us. I mean, the average move on the day is somewhere around $6. So I see limited upside. Let me bring in my dynamic trends and see what type of gamma levels we have for the morning, because a lot of them have probably been blown through already with these pre-market levels. And while I'm at it, I'll say good morning, everybody. Angela, good morning. Chris, good morning. Daniel, Steve, good morning. Ruth, good morning. Darnell, David, Gary, Edward, good morning. Willard, good morning. Happy Friday, everybody. Joe, good morning. All right, so let me float this down. This is the SPY. Let's go pre-market levels here. So 510 is the big gamma level that I see today. This is going to fill up pretty quickly. We're probably going to come popping out of the gates at 9:30 with a major bias with the call volume sentiment. Let's go QQQ, same thing. Qs pre-market. So we're opening up around 433. That's pushing up. I mean, 435 is what I have as far as the highest gamma level thus far for opening bell or pre-market rather. And I mean, a lot of times when we have these huge gaps, it might be a big gap up here. Price just kind of fumbles around, maybe drifts a little bit higher. Okay, I mean, I'm not looking to fade this move. I mean, if anything, this is just going to be a good day for the portfolio. Everything's going to be green. The issue with today would be if we come up here and we stay up here, you know, everyone might be thinking like, oh, we're going to fill the gap, and there might be zero direction, and this gap gets filled later, like next week, if something rocks it a little bit, you know. So anyway, that's where we're at for today as far as pre-market. If I go into real-time levels, this will kick in around 9:30. This was really helpful when I looked at what happened on Tuesday. I think I posted this in Discord. See if I kept it here. Yeah. So I get real-time levels as this is unfolding. So we had the day before FOMC, the day of FOMC, and we had this rally and rip up to this 510 level. It came up to 508.27 and then faded all the way back down before FOMC was done. So we had about a $2 range for the entire day that ended up going up from the low at 500 to the high of 508. It had an $8.27 move and then came crashing back down by another, $6 or so. So a lot of volatility on Tuesday. Gamma level at 510 filled up, on the spot. So it was pretty easy to see once we had a breakout, where we're going. I had a pretty good intraday trade on that one. I was long at 501 on the call side, and I was long at 500 on the put side. The 501 call obviously paid out really nicely. That was paying over $7, and I got into that straddle. It was a strangle actually. Got in that strangle for like $3.50, so not too bad. All right, let's see here. Lynn, good morning. Howdy. So, all right, let me go back to this. So probability is we're not going to fill the gap today. That's on the SPY. Let's go QQQ and look at the same thing. So if we have a 1 to 1% gap, 1 to 1.5% gap, and that's probably more so. This might actually be greater than 1.5 on the Qs. Let's find out. This is a $7 move. So we are up just shy of $7 right now. 433.62 minus 426.90. 672 on a 426 instrument. We're up 1.57%. So that actually gets me to that gap by size for the last 5 years on the Qs. Anytime we've had a 1.5% gap or higher, 80% probability that we're not filling that gap today. Okay. ATR wise, let's go into, we want price action. We want indicators for average true range on the Qs. And I'd like to see this by weekday. So let's go by weekday. It is Friday. 65% of the time, the market's going to respect the range. Current range for the ATR is $7. Well, if we open up at $6 and change, we push to $7. Again, 65% of the time, it's going to respect that range, which means I might look to fade today's Qs, maybe, and not like right away. I mean, there could still be another 0.5 to 1% push up. We could certainly stretch and have a big day. I mean, the SPY could push $8, $9, $10 from yesterday's close into today's high. The Qs could certainly push $9, $10, $11 from yesterday's close to today's high. So I'm not just jumping in behind this kind of aggressive kitchen sink Apple saves the stock market rally for today at least. So here's Apple pre-market 185. The nice thing is I've got a covered call at 167. The bad side is I'm down $8 on that. But there's enough premium and possibly enough time to my May 17th, and I might go out another week or two and see if I can roll maybe out to the end of the month, keep it at 167.50 and get some extra premium for it. And it also might allow me, now they're up to 185, my 170 strike might allow me to roll up and keep some credit as well. So I can roll it up $2.50 on my Apple shares as well as collect some credit on that. If it comes back and fills a huge gap, that's fine. But I didn't really expect Apple to do much of anything outside of. I mean, the average move for Apple for an earnings play is about $6 or $7. The average weekly move is $7.46. You can see that the market got a little excited for a $12 move right there. That was almost double the standard deviation. So we still have support on Apple, resistance on Apple, right? So I could see Apple drifting higher. If we struggle to make all-time highs, I can see Apple coming right back down to gap territory later, and we just have a bigger range. Okay. All right. Thanks, Don. I appreciate that. Thanks, Matt. Thanks, Mark. Sean says, what are your thoughts on the dollar Swiss and the yen weakness? Well, let's take a look at those, shall we? So let me load up my Tasty platform here as well. So I'm ready for some opening bell. Tasty trade. By the way, if anybody's interested, I'm going to be in Seattle for a Tasty Trade conference in May. I think their conference is May 18th. If anybody'd like to be in Seattle and meet up, let me know. You can message me in Discord, but I'll be in Seattle for that weekend. The conference will be on Saturday. I think it's Saturday the 18th. Yep. So I'll spend that weekend in Seattle. Yeah, just throwing that out there. And then later this year, I don't know if I have any Kiwis out there, any Aussies out there, but in November, I'll be at a conference with TradeView in November. So if anybody's in the Australia area, Melbourne specifically, in November, I will be there for a week. So I'll talk about that more later. But all right, let's see what's up we have here. Okay, let's go Swiss pairs, dollar index, all that good stuff. So dollar index taking a big old drop. That was non-farm payroll this morning. I'm curious right now. I mean, obviously the message from the Fed on Wednesday kind of shifted things around. The market's still anticipating the September-November rate cut. The dollar dropping, I do think that this right here, this dollar dropping is good for risk appetite. So that's pretty much what we're seeing today. Dollar's down, everything else has a chance to rally. So this is why in my robots, this is why I was neutral on the dollar, meaning I'm willing to take my robots and go both directions, because that is a big 3-day drop on the dollar. This was today, Thursday, Wednesday. So even when the market closed on Wednesday, we had a down day for the dollar. Thursday had some follow through, and today again pushes in here. Now, having said that, there is only, I mean, this little candle right here for a pocket. And this support, the dollar, if it turns next week, then we still have dollar strength resuming. Okay, I'm not thinking that the dollar is permanently bearish. So if this level right here holds, in fact, I might as well put a trend line there. Linda, what's up, Linda? How you been? Every time we get a good fill in equities on demand, I just think of old Linda, just making institutional fills out there. Let's see, Pan W. I'll take a look at that one for you. So this is all I'm thinking on the dollar. Okay, we have a broadening pattern. We've pulled back. We're at these, not quite at the highs at 107 and change. And here's what I see on the dollar. I'm both directions with my robots because the dollar's kind of the wild card right now. I mean, I think for the market to salvage some risk on trading and higher highs, everything's green, everything's risk appetite, the dollar has to get weaker. Right. I mean, at first I thought this was going to be a weird year where the dollar is going to get stronger, being kind of the higher yielding currency and one of the central banks that refuses to cut rates until later on when other central banks will cut first. And I'm going to look at the Fed watch tool here in just a moment. But this support level, I would say right now, if the dollar's back below 104, then we're taking out this low. To me, this looks like this is, dollar selling off, and that would be where I'd officially say below 104, the dollar's likely going to head down. Okay, but having 1, 2, 3 days of selling off, we're really just coming back into this pocket right here. All right, and if this turns aggressively, then there's the stop loss. There's your trend buy. And then you look at the dollar to resume to get back to this 107 and change area. 107 and change. I said 108 before I really turned bearish on the dollar for a bigger technical spot. Okay. So that's what I think of the dollar. As far as the Swiss, we can go Swiss X. Is there I don't know if there's an index on here, but let's look no further than, dollar Swiss is dropping, which is actually good. I talked about this in the flex room this week. So I was initially holding out for a 92.25, 92.50 profit on the dollar Swiss and take off kind of half my position. I have 10 positions running on the dollar Swiss bullish. And right now, I'm just going to go ahead and drag this fib here. So that low to high. And at this point, we're pulling back to the 236. I will probably wait for a 382, find this pocket. I'll go 382, probably a 50, and a 618. And I'll go 1, 2, 3, and I'm going to add into dollar Swiss for longs. If this is something I can kind of buy in here, the 89 to 87 zone, and then take profit up here towards 94. I'm looking for profit at least to 96, possibly up to 98. And if I'm really, holding out for a big fat profit, it's going to be over parity at 1.00. Again, positive swap is a big incentive for that trade. Good technicals. This turning the way that it's doing right now, this looks like a head and shoulders now instead of a crown because we didn't break the high. So if this is a head and shoulders, then we're looking at this as a neckline. We'll be looking for bullishness over here to see if we can get a head start on the right shoulder. We break the neckline, and then off we go. The nice thing is this is a good measured target. So if we go low to high and we measure this as a head and shoulders, that's probably going to put us up towards parity, 1.00. Right? So I'm still pretty excited about the dollar Swiss. I'm happy we're getting a pullback on the other Swiss crosses. Let's have a look here. Aussie Swiss. Aussie Swiss is trying to breach some highs, which is nice. CAD Swiss is pulling back. Man, that was the trade I took this week in the trading battle. I was short CAD Swiss and long Aussie Swiss, and they're both going the right direction. So who needs a hedge when you can get them both right? I closed out those trades on Wednesday afternoon or Thursday morning. So I'm up about $900 for the trading battle. I think Gary's going to edge me out with his 50 lot position on Ethereum versus my, half to one standard lot that I was taking on a lot of my trades. But all in all, it's a pretty good week. And anyway, so CAD Swiss is fine. If it pulls back, great. I'm still long on CAD Swiss. Euro Swiss pulling back as well. I still see this as even if this is a crown pattern. So high right here, lows right here, come back into previous resistance, becoming support. That's where we had this little flashy move. So somewhere I'll just make a fib on this. I think this is a pretty easy spot to look. So low to high, we had that pullback and that wick right around that 382. I'd almost like to see it just come back and retest. Test the 382, test the 50, test the 618. Look for some long positions in here. If this is a 1, 2, 3 wave move or 3 wave correction to form a flat pattern, and then we look longer on the Euro Swiss. So that's what I'll be looking for there to get some add-ins. This actually looks pretty good for the portfolio builder to continue to get some add-on trades. Small trade sizes, but another pullback level to add into with a lot of these Swiss crosses. Pound Swiss also I'm pulling back totally fine. Take a fib, low to high. Okay, somewhere in here. We pulled back to the 236 on the closes. I do the same thing. 38%, 50, 618. Look for some add-on trades there. Pound Swiss with the trade size and the margin. Just be conscious of that because it's a little bit more expensive to trade. New Zealand Swiss is heading slightly, well, at least getting green. We're not quite up the highs, but still buying this one. Hopefully we can just break these highs. If we break these highs around 5,500, I'd love to see this as an equal low and you measure that move, which is going to be around 300 pips. It's about a 300 pip range, and we would go 55 to 58 to match that to the upside. So I'd like to see some more bullishness confirm, and then we can measure that move up to 58 on New Zealand Swiss. Okay. All right. So that's Swiss crosses. Japanese yen, good luck. Dollar yen is falling aggressively. I talked about this a lot in the flex room yesterday. I'm really not convinced that we're permanently seeing yen strength. Okay, I see this as temporary, at least for right now, until I'm proven otherwise, or until I see otherwise. But this is the currency strength from overnight. So the yen was a little bit stronger, still a little bit stronger, but we just had a big drop in the dollar with non-farm payroll. So we have New Zealand on top, Aussie on top, yen and Swiss against the dollar. Looking at this chart for a second, I would say that if I'm going to turn bearish on the dollar, the dollar versus the yen, I'd have to see price out here, and I'd have to see some type of bear pattern. Now, right now, if we come back below 152 or so, that's understandable. We could put in a bit of a near term top, but I see this trend line also offering the type of support where this thing falls and falls and falls, and then we have a chance to turn bullish. Here's what I would say. If I like this trade, I'm going to put a stop loss very, very tight, try to get this thing to come back into either this 160 high again, or even a pullback that gets us, 30 to 50% back into this range. And then for the dollar yen to continue to sell off, it'd have to be that, right? So any trade I'm taking on yen crosses will be small trade size with stop losses. But I don't necessarily think that we are smashing down and this intervention is finally sticking, even though it is interesting. They did it twice in 1 week. They did it Monday and Wednesday. But I don't think we're getting permanent JPY strength. So let's just take a look at the currency pairs. I mean, Aussie yen's going to have to break this trend line, take out a low at 98. It hasn't happened yet. I think this is a good opportunity to kind of watch and see if you can buy this thing low and then resume this upside and possibly retest the intervention highs at 104. CAD yen's pulling back a lot like the dollar. This is the support level on the CAD yen I have to see taken out. So if the CAD yen falls, if we bounce there, that's an opportunity to get long, tight stop loss. Once you're in profit by 50 to 100 pips, move the stop loss to break even and stop worrying about it. If it goes all the way back up to the highs, easy trade, right? If it comes back to the lows, take a break even stop or better, and then we can reassess whether it's really time to sell this thing. Okay, so that's CAD yen. Swiss yen, probably my least favorite because they're both risk on, risk off. To me, the Swiss yen would have to do this. With this little spike up, if we came down into this territory and broke this low, then this could be a head and shoulders trade. I'm not drawing that very well, but from this level right here, if we go left shoulder, head to neckline, or if we break that, that's a crown, and then I'd look to possibly fade that move. Okay, now again, if I saw that pattern, take the trade, stop loss above, and trade really small. I would probably risk like $100 to $200 here max. I'm not looking to take big risks on these yen crosses, so my trade size will stay very, very small. Okay. Pound yen. Pound yen also unfolding a little bit. Watching this one carefully. Pound yen is a really good currency for head and shoulders patterns. When we see big tops on this, it's usually a head and shoulders pattern. So again, if this comes down, 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 down like so, takes out this low, this pullback might offer a top. It might be a crown, might be a head and shoulders pattern. I think the bigger pattern is this though. I'm not lying here. I think that the bigger pattern would be this low, and the yen would have to come all the way back down here, all the way here, all the way here. That's the trade that I would be looking for, and this could be very long to set up and actually have the follow through. So if we drop aggressively on the pound yen, if it turns green on a 1 hour, 4 hour chart, I might take a short term buy and just see if I can get that, like I said, to break even or better. And then, it proves that it wants to sell off, because if all it does is intervention, fall, turn bullish, and then that's the pivot on the carry trade again, and all of a sudden we're back up to the highs. This is why I don't really trust that we're going to get risk. I mean, right now it's risk on. So if we have risk on trading, I don't see the yen in the wake of that being a stronger currency pair that's going to sustain. I can see it staying this way for this week, maybe a little bit into next week. But I mean, who out there trusts the Bank of Japan? Show of hands, probably zero. I don't, and I'm certainly not trying to trade large trade sizes and let a central bank dictate what these currency pairs are going to do. So take some stabs, watch your prices. Right now, I'm looking at if we turn bullish on the 1 hour, 4 hour chart, it's easy with my Masterflex system. Just look at some indicators to line up, take a buy trade, and try to get that thing to break even or better. Okay, New Zealand yen, same thing. Aussie yen, New Zealand yen probably have the best looking structure as far as, if the New Zealand yen is way down here, then to me this is structure potentially broken and we head lower, right? But if this trend line sticks as well as the Aussie yen, if we're bouncing here, heading back up, possibly, and just keep this channel going. And you're buying low, tight stop loss, getting to break even or better, and off you go. So that's all I'm looking at. So cover the dollar, cover the Swiss, cover the yen. Right now, we're about 3 minutes away from opening bell. Let me get logged into my Tasty platform here. And I'm going to be looking at SPY and Qs today. And with 510 on the SPY, let's go up here. 3 minutes away from opening, $40.42. And man, this is so I have a 510 by 508 that did I close that? I know I closed the one that expired today. So the 5-3 expiration SPY for profit. I have one for next week that either, we get into some bigger levels higher or this fades and maybe we have another down week between this 510 and 500 level. If we get back down to 500, that does put this around $8. So I will see if that's what it's going to take to take my trade. But anyway, that's next week, so I'll worry about that next week. So coming into the market this morning, seeing some profit. We should have some good upside potential on pretty much everything. Apple, I'm going to come in and look at rolling a couple of covered calls. The May 17th, I could probably roll it out to the 24th or the 31st, and also roll it up to maybe 170. If I can wash that, where even if I roll it up and I pay like less than 50 cents, that gives me $2 more upside with the probability that 170 would still be safe. I mean, Apple would have to fall $12, $13 in the next couple of weeks, which the average week is around $6. So I think Apple's okay for me to just roll it and keep the cost basis lower, try to get it called away. 170 is not bad from a 164, 165 break even. But big surprise on Apple that the market's loving, and we're up another. This is now up $6 and change for the day. Man, wild stuff. So it's opening bell. We opened up at 511. Let's have a look. This could be a gap up. It might drift a little bit higher. Chart alarm's going off like crazy. And looking at some instant profits on the day. Okay, I wouldn't be surprised if my profits are just hovering around this, 10K, and then it's gonna move all over the place. We're gonna have, if we have a gap fill today, that's gonna be something to watch out for. But I could see us from close yesterday at 505. We're trading at 511. I mean, it's not like we can't move this much, right? So I mean, this is about a $5 gap. If I go real time here, so the 510 gamma's been hit. If I go real time, look at all these lit up to the upside. Now we're talking contracts or gamma levels up to 515, 516, 517. That's a heck of a stretch on the day if we're going to push up $10 today. So here's what I'd be interested in seeing. If price just stumbles and struggles for the first kind of hour of trading, if we break this level here, possibly an attempt to fill the gap, but likely it's not going to fill the gap all the way. But initially, I'm looking to see in the first 5 minutes of trading here at 9:35, we should have some call option volume sentiment. It should actually be showing up right now. Should be at least. So anyway, I'm going to keep a very, very close eye on this stuff. Okay. All right. So I'll put that back there. I'm watching SPX trading up to 51.25. Let me take a look at the NDX because I have a trade this morning. I need to make sure that hopefully it stays below. What? I feel like this feed isn't live right now. Can somebody double check NDX for me? So I have a trade that expires Tuesday for an 18,000. Are we trading at 18 and change? Hang on a second. This is weird. So QQQ trading up to 433, leaving a gap. Let's see for the week. I'm just curious what the market's looking at for the week. So this weekly candle, kind of wild. That's a low. This is the Qs. Low at 420, high at 434. Average move is right around $14.51 for the week. We're pretty much right there. Low at 420.63, high at 413.63. That's a $14 candle on the exact week. So we're right at average, which obviously it did it in a very fancy way with crazy volatility on Wednesday and just a huge gap today. So, that's price. What are you going to do? So 433. If this gap fills, that would be kind of nice to see it either try to fill, today, at least attempt to fill today or fill early next week. And then I'm not sure why my NDX feed isn't showing the exact spot. So I have some broken wing butterflies down here at 48.20, broken wings up here at 5,300, and then NDX still showing 17.5401, but that can't be right. If the Qs are gapping up the way they are, they're probably pushing up here towards like 17.8. So I'm just curious if anybody has a feed. Yeah, 17.840. Okay, thanks, Gary. That's where I thought it should be, right around this floor. So if we push up, gap up, let's see if that move can just kind of stay right there or fade a little bit for the day. 17.810. Okay, I could, and again, I'm watching this closely because here are my real time gamma levels. I'm not really going to do much of, well, the market can do all sorts of wild stuff. I was thinking if I did initially if I could get a butterfly here and see that the probability is the gap doesn't fill today. Let me take a look at that. That would be a gap fill at 505 if I go to the SPX. Let me go right here. So if I go SPX, I don't really want to call the top on this thing, okay? And if we come back and try to fill this gap with a big fat dump from 51.28 all the way back down to 50.65, I mean the SPX can move 60, 70 points in a day, no problem. Let me see if I can get like a 50-50. I'm going to try to get a 50-50. So we're looking at 55% call option volume versus 0 puts. I'm going to try to get 50-50 on an SPX trade and see if that will. SPX trade. I'm going to look at rolling Apple as well. So 50. So a 50-50 broken wing might be okay if it pays today. Let's find out. It's far enough away it might not. I could set it up for a Monday as well. Monday might actually be better, but Mondays are always tough for me to sit around and do full expiration on Monday. So let me look at today. So the 3rd, if I did a 50-50, this would be a put spread. And already it's an 8 delta, so I'm probably not going to get a lot of premium for it, which means 20 cents credit. I'm not going to take that trade at 20 cents, but I will put in a pending PPC at 36.50. Okay. I'm going to put a pending order in. So that's an 8 or 9 delta. If I put in a pending order to get this filled around 50 cents, I think that is fair. And that would be, not only do we have to come back and fill the gap today, but we'd have to actually break and close. I mean, that gap was 50.65. We'd have to go another 15 points below that. So from a high at 30 down to 50, that'd be 30 to 50 is an 80-point move. That's a big move on the day. So I'm going to put in a pending order here. 50.50 and 50.55 is going to be a broken wing butterfly. I'm going to try to get filled for 50 cents, and it's just going to be pending for today. So I'll do a good till canceled and see if I can get filled. If it comes back lower, I might be able to get this for 75 cents. Just depends on how much time it takes. I'll try. Let me try. NDX is usually a little bit easier to fill at 75 cents or $1. So I'll try a 60-cent fill on this one for 2 contracts. So this is going to be a 50-50 by 55 by 40. Filled for the day. If it does get filled, great. If it doesn't, no big deal. But that's what I'm going to put in for today. So we get these going here. So I'm going in 60 cents. Good for the day. So this will cancel if it's not filled. And then I might look at one for a Monday or Tuesday as well. If that offers a little bit more premium. But I mean, today I'm kind of good for the day. Yep, I'll take a look at that one. PANW, okay. So let me get this in for pending 60 cents. So pending 60 cents, similar. Okay. Just got to get the trades in here. And last one. Okay. So pending order right there. Let me get that into my tracker. So that's a pending broken wing butterfly for a 5/3 expiration. It's -4 at 50.50, +2 at 50.55, and a +2 at 50.40. Trying to get filled for 60 cents on the SPX. All right, so that one may not be filled. But I'm going to keep an eye on that one. We're just hanging out around 51.20. Let me go to the NDX here to get a live price feed, 17,827. Okay, so into the 1800s, that's where my trade is for next week. So if I go into the 7th, so it's threatened a little bit here, but based on the expected move, if we have, as expected, this actually could work out very nicely on Tuesday next week, because getting these filled in, this is my pin butterfly. So if I have, that's my trade. If price heads up towards this level and ramps me up, I might be able to turn $1 credit into maybe $2, $3, $4 of extra credit. So I'll see what this does for next week, but this is going to have to shift around a little bit. We'll find out. Okay, so positions there. All right, so let me see if I can do a roll on Apple. Let me take a look at PANW. This is SPX for the day. So the tricky thing here on SPX is what you're noticing real-time gamma is they're all bullish. I don't see anything to the downside. So this makes it a little bit more complicated. It's easier to get a read on the SPY because the SPY will maintain. I mean, right now it's like, how high are we going to push the SPY today, right? It's like it's staying here at 510, new levels up here at 512, new levels up here to 5. I mean, that would be a crazy day if we push all the way up here. Okay. But I will say this, if we push all the way up, here, my 510 by 508 reverse iron condor should be enough to make some money on that trade. It'd be up, $6 or $7, but with the time premium left in it for next week, that should probably be trading at like $8.50 to $9. I might just take the profit and be done with it. Just because we were all the way down to 500 this week, and I should have taken freaking profit there too. But that was exactly 8 and change. Looking for more, see if we broke to test the lows at 494. So anyway, lots to watch, and just let this all kind of unfold to digest it. So if we continue to see gamma levels get filled to the upside, I know that we had a 505 close yesterday. So what's realistic? Well, $6 to $7 is the expected move. Okay. So from 505 to 5, 10, 11, 12, that's reasonable within the averages to hit today. But if we have a crazy day where it gets to 5, 12, 13, 14, I might look at, fading that into next week. Maybe. I don't know, if I want to, I'll have to decide on that. If I do it, I'm going to be way up above the price anyway. But I want to see how firm this rally is. Right? So, all right, I'll put that back. Let's go PANW. Palo Alto. Yeah, we've talked about this one before. Let me look at it from a fundamental snapshot really quickly. PANW. So this one I know had a terrible earnings report, right? So this is why I wouldn't personally be in the trade. Earnings forecast to decline by an average of 14.7% for the next 3 years. It doesn't say unprofitable, but it does say that earnings are due to decline. Earnings grew by 6,000%. I don't know what that is outside of, are they just talking AI nonstop and the market's just crazy, loving Palo Alto, right? Cybersecurity solutions. I mean, I can do some more digging here, but in my elevator pitch discussion of Palo Alto, I would say where I see the chart right now, I mean, forecast declining. What's the expected growth outlook? Let's go to Yahoo Finance and find out. So let's go to here, PANW. And let's go to analysis and find some growth outlooks. So earnings per share trend, pretty consistent. Growth estimates. So this would be what I'd be watching, right? I mean, as long as we have traction to the upside. So past 5 years have been solid. Next 5 years, slower growth, but positive. Next year, positive. Current year. So, I mean, growth is slowing down. Doesn't mean it's a bad thing. And then let's see what they have for debt. If this is a company that has debt, probably not something I want to participate in too much. But let's go to FinViz and take a look here. So right now, cash 1045, debt to equity, long-term debt to equity. So I mean, they clearly have plenty of cash on hand. This year's EPS, next year, next 5 years, I mean, positive growth is solid. Make sure this is liquid. What's average volume? 6.14 million, plenty liquid. Yep. 95 billion in market cap. Yep. So yeah, they check some boxes. All right, now I can just go back to the charts, take a look at the technicals. So let's go here, back to the chart. And I mean, off of the highs, I think this is the good and the bad about some of these, major tech / AI / semiconductors, right? You have this high, you have this low. I think we could make a case for this being the important low to watch, and we pulled back around 50%. So I could see this stock going a little bit sideways and having, a large low and a large high going sideways for a while, but building a position somewhere in here. This 257 to 260 zone, previous resistance becoming some support. That giant earnings fail that we saw for Q1, that would have been Q4 earnings in Q1. That was, dropping right into that past level of resistance becoming support. So if we had a chance to look at this trade, here's what I would consider. I don't mind taking an option trade somewhere around this 260 handle. So if we come back down to 260, I can look at some credit spreads, make this very cost effective. But I'm not necessarily like crazy bullish on the stock overall. That's not a good sign when the entire market for Q1 was up and this stock drops aggressive on earnings. So I feel like there's something underneath that just caused a big surprise. And I think really it was just a bad earnings report, wasn't it? No, it wasn't. It wasn't even a bad earnings report. We just had this huge dump. That was February. I mean, think about the broader market. Everything in January, February, March was up, and yet this stock dropped from 360 all the way down to 260. That's a $100 drop. So if we go sideways, again, I'm looking at 260 is kind of a solid support level. Comes all the way down to this area. I could see myself getting long there. I like that spot. So watching that low, if we come back and revisit that low, looking for some indecision, but trying to buy low enough that I can turn a couple trades in profit. So that's my thought. Okay. All right. That's PANW. Is Flex a stock? This one? Where are we at here? Electronic technology. What are they doing? Supply chain manufacturing solutions, industries, end markets, flexibility solutions, reliability solutions, agility solutions. Segments consist of communications, enterprise, cloud, infrastructure. I don't know, man. I've seen very little about this stock. I mean, stocks like this, I would also think like, what prevents this from just getting bought by Microsoft or bought by Google, or if AI, if generative AI becomes an Apple thing, what prevents like the mega cap companies from just consuming all these companies for, again, for premiums? But I mean, if you're an investor here, you don't know what that looks like. So I don't know. I think the same thing in the EV place or EV space. I see a lot of traders asking me, what about Fisker? What about Lucid? What about Rivian? I don't want to touch any of those stocks because I think they're ultimately just going to be buyouts. Rivian was just given like another cash injection to keep the place open. I think they have a Ohio facility, and I mean they need cash like crazy because they're making cars at $30,000-$40,000 losses per unit. Um, they do have higher unit demands, which is nice, but they just have limited cash. And anyway, I think if there are smaller cap stocks that are in the AI space, good for them. But outside of, I don't know, like the needle in the haystack, I feel like the best ones are going to be possibly consumed, absorbed, bought out by mega cap. So again, I look at this stock. I'm not interested at current prices. I would say you take this low, this high, try to find some trend line support. Try to look at something in here that pulls back around $23 to maybe $22. Maybe looking to take a stab in there and see if this resumes the uptrend. So just treat it like a technical trade. I can do more exploring on it, but I've never seen it before, so not something I can make a really informed decision on right now. Okay. All right. Anything else on the day? SPY's way the heck up here. Big gap to watch for. I will be watching this very carefully today. So this is the gap. Okay. I do think in a short-term direction, I mean, I think that price could still drift a little bit higher. But if we go up, I mean, the average daily move is $6.20. If we go $8 to $9 to $10, the timing of this is not, not looking to fade this on a Friday. But if we get up $8, $9, $10, I do think a little pullback might be an easy play for Monday. Okay. So, all right, I'm going to keep a close eye on this, and then my NDX feed. Let's see if this one came back. NDX feed at 17.85, fading a little bit. So again, really big gap off of FOMC to see what this thing does. Okay, really quickly, I'll go back to SPY. That might be an intraday trade that I look at this morning, maybe, or I just enjoy the green on the day and say that, hey, portfolio's up, everything's looking pretty good. What I want to look at right now before I switch gears to equities on demand, I'm pretty sure I'm just going to be EOD at 10 o'clock. Yep. All right, good. I want to see if I can roll Apple. So 165.50. If I roll these out, let me look. So I'm going to do a quick roll. Right now, if I roll this out, so here's the good and the bad. I can roll this up by $2.50, but you can see that I'm getting asked to pay, $2 and change for it. Now, I could also roll this out expiration wise to the 31st, roll it up $2.50 and pay $1.75. Now that's going to increase my cost basis, but it's going to take me from a 250. It's going to help me make an extra, 70, about 60 cents right now. And I've been rolling this for credits. Let me see if I can. Here's the annoying part about Apple. Let me do this. If I hate to decrease my cost basis, but if I can get the premium in a 165, I might just do this. So let me go expiration to the 24th, move this down to a 165. So I could actually move my strike down to 165, get $2.70. So this helps me get an extra 22 cents net credit. Okay, so this is tricky math, but it's not tricky math. It's kind of annoying, right? 167.50. If I roll it down to 165, okay, 250 should be what the actual roll should pay me. If I can roll this down to 165 and get, I need to get at least all of 250. So what I'm looking for is if I could get 275, 285, 290. I'm going to try to roll this for, 285 would be kind of nice. I'm going to see if I can roll this for 285. 285 gives me an extra 30 cents per share, but that takes me down to 165. It's like, does this handicap me? Let me see if I can roll this for $3. I'm going to try to roll this for $3, and I'll do this. Let's go good for the day. Good for the day, because I'm not going to lose the stock until next Friday anyway. I'm going to try to get this for $3 on a roll. So this is that account for $3 pending. Okay, and then this one, same thing. If I do a quick roll, 24th, I'll roll this down to 65, try to get $3 for this, and then good for the day. All right, so I'm going to try to do this. Now, if I get it filled at $3, that lowers my cost basis. So I have a 165. Let me see what my break even is. It's 165 and change right now. So my break even is 164.89. Okay, 164.89. If I lowered it by $3, that takes my break even down to 161.89. I'd lose the stock at 165. So I'd make $3.11 on the 200 shares that I have. So I'd make $6.22 in profit by the 24th, and I can still keep working this and trying to get a little bit more credit for this. At this point on Apple, what I might do with the roll here, and just to be creative, if I just roll out farther in time and one thing you can always look at for rolling is go out further, go out further, go out further. The problem is I don't think the strikes are going to improve that much. So the good thing is we're trading at 184. Let me take a new look at this. I might cancel this trade if I find something better. So let's go this account here and do a quick roll. So let me see if I roll this up to 170, how far out do I have to go? So if I roll this out to July, I could roll this up. Okay, I'm better off doing this. Roll this up to 170, roll this out to July, and get 45 cents of credit. Increases my. I'm going to do that. This is silly. Why would I roll it for a debit when I can roll it out further on a stock that I don't mind owning? So cancel that. Cancel that. Now I can roll this out to July 19th and keep this at 170, which allows me to increase my cost or increase my profit by another $2.50 plus what I collect on the roll. So I'm going to try to roll this for 50 cents. Easy peasy. So I rolled that at 50 cents. All right, that's totally fine. That's Apple. What just happened there? There we go. Okay, so now I've got a 170. Now this one, roll this one out to July July 19th. Now it's at 55.60 cents. See if I get filled for, I'll try to get 50 cents again. Filled at 52 cents. All right, perfect. So now I'll go in and update that. So what I just did is the following. I went to, and I'll just type this out. So I currently have a break even. So break even is 164.89. I rolled out to July 19th for 50 cents credit, and I rolled up to 170 strike. Okay, so now my break even. So the new break even is 164.39, and the new strike is 170. Okay, so that means if it gets called away in July, I'm looking at $5.41 per contract. Okay, $5.41 per contract. Actually, I'll just say $5.41 per share times 200 shares. So I can turn this into just shy of $1,100 in July. And and look, Apple can keep going higher, and I don't know if I'm going to roll it much more. But now that I'm out to July, it's okay. If I lose it at 170, make $1,000, it's worth it. I mean, that's a little, but half of 1% on some of these accounts. I'll take that. And if I wanted to and just keep it rolling all summer, I can do that into maybe August and just stay out of the way. So I'll keep an eye on this one. But for right now, I'm just gonna manage that as a roll, and I'll consider that good. I'd rather do that than roll it up for a debit and get it called away and make an extra 30-40 cents when I can make an extra. I'm essentially making an extra $3 profit. So that's a big difference. Okay. All right. So we've been going for about an hour today for the Pulver report. I'll keep it under the hour. I got to start the Equities on Demand trading room. Any other questions for me today? We good? Before you go, if you do one thing for me, hit that like button. YouTube algorithm supports it. Plus, videos like this will pop up on streams elsewhere. If we got live traders, live investors, live sessions. If you have if I've got 50 people watching live, 300 people watching through the week, if you're hitting that like button for me, that helps. And all of a sudden, when I go live, these videos pop up in other people's suggested feeds, so we can get some more followers, more traders, and it's always nice to have that. So, okay, good stuff. Thanks, Angela. Thanks, Linda. Thanks, Ann. Thanks, everybody, for being here. Equities on Demand students, let's pop into the trading room. Give me just a few minutes. Let's start the session at like 10:05, and let's continue on about our merry way. All right, see you all in a little bit. Thanks, bye.